Hello, good evening, and a very warm welcome to the next session of Powerhouse Series BFSI. I hope you all are having a good day and a start of the week. I hope you're not having a very bluey Monday. We have about 60 plus participants. Just we can we just wait for 2 or 3 minutes, just for the number to rise up a little bit. In the meantime, the participants who have already joined, can you share some feedback for Raid Saab regarding the last session? That way, people who have joined today but wasn't able to join the other day would be able to know what have they missed and what would they need to cover up now. Can anybody share some feedback? Anybody? Aslan, can you share some feedback? Okay, a lot of people are shy today. Can I request you, Raid Saab, to just give a summary of the last session?
Yeah, sure. Okay, so good evening, everyone, and thank you for attending again. I hope most of you must have attended my recent, the last 28th September session, in which we were able to discuss about the financial markets and their efficiencies in accordance to the efficient market hypothesis. And from there, we continue to the analytical part. Today, we'll be discussing about the technical analysis, the subject of today's, but in the next session, perhaps day after tomorrow, we'll be discussing on the other part, that is fundamental analysis. So if you have not attended, in case the previous session I held, I am sure that you must be having the recording access to that. You might consider revisiting that recording session. But anyways, today's session is not very much linked to the previous session. It is independent in most cases. So anyone who did not attend the previous session will not feel alien in this session. So this is an independent one. So I would like to start now. And meanwhile, as the parts go on, I'll keep the session interactive and invite your questions as well. So I'll be starting from now. Okay, so today's subject is about technical analysis, popularly also known as charting. All the traders in any financial markets use this technique, always use this technique. So there is no way that a trader can decide his investments, where to put his investments without these charting techniques known as technical analysis. I will start with my brief introduction in case any one of you did not attend my session on the 28th September. So my name is Raid Nazir Ahmed, and regarding financial markets, it's 22 years of my trading experience. So I started back in 1999, late 1999, and it's comfortably more than 22 years I am trading in the financial markets. And I have traded over this period in all sort of financial markets, whether it's stock exchange, whether it's forex, whether it's cryptos, whether it's commodities. I have tried a lot of portfolios. Apart from that, I have professional training and mentoring experience, being an ACC myself. I've been training since 18 years, and my teaching experience spans to 19 years, in which I specialized in subjects of management accountancy, taxation, and financial management in both basic and advanced levels, which are F5, F6, F9, P4, P6. Apart from ACC, I have also tutored students of CPA, CMA, MBA, and safely speaking, comfortably speaking, I have more than 17,000 students to my credit. And in this 19-year span, I have also authored some textbooks, study notes, articles, blogs, and etc. Not vlogs yet, but I perhaps in the coming period I'll be starting the vlogs as well. Okay, so a quick recap, a very quick brief recap. In last session we discussed about financial markets. So financial markets is basically a marketplace where the traded instruments are bought and sold by different participants. So for example, stock exchange, which is a capital market, the shares are sold and purchased through stock exchange. So stock exchange serves as a marketplace. But there are many sort of financial markets, including stock exchange, foreign exchange markets, that is forex, commodity markets in which, for example, gold and copper and energies, natural gas, crude oil are traded. Agriculture producers are also traded over there. And crypto, I'm sure that in today's world, no one is out there who does not know about the crypto, for example, Bitcoin, Ethereum, and everything else. So crypto exchange is also a financial market. So these are the main financial markets. And any trader who invests or trades assets in the financial markets, whether they are shares, bonds, metals, energy, currencies, cryptos, and etc., etc. The traders do two types of analysis. One is known as fundamental analysis, and the other is technical analysis. In fact, these both are used before making an investment decision for trading. Fundamental analysis is our subject for the next session, scheduled for 5th of October, that is day after tomorrow. So we'll be having discussion on it in depth on that time. Today's topic is about technical analysis, also known as charting. But before I proceed, uh, a brief point is that technical analysis is common for all sort of markets. So any trader, whether he's trading in the stock exchange, forex, cryptos, currencies, anything. So technical analysis is a common factor, and the techniques are common for all sort of markets. Whereas fundamental analysis, which we'll be discussing day after tomorrow, is different for each type of analysis. What I mean is that if you are deciding to buy some shares of a particular company, then the fundamental analysis of that particular company will be very different from the fundamental analysis for precious metals like gold or crude oil. So crude oil fundamental analysis is entirely different as compared to shares of any asset. Similarly, if anyone is doing a fundamental analysis of Great Britain pound, say, so the Great Britain pound fundamental analysis will be very different from the Japanese yen, for example. Similarly, the fundamental analysis of Pakistan rupees is very much different from the fundamental analysis of Indian rupees. But we will be discussing that in depth with insights day after tomorrow. So fundamental analysis is different for each asset type, but technical analysis is same for all asset types, whether it is any asset type, whether it's shares, it's about bonds, it's about cryptos, it's about currencies, anything. Technical analysis is also known as charting, a very lively uh, thing that each trader enjoys in the market. So if you have ever seen anyone trading or you have experienced yourself, so you will be finding people sitting on the monitors, having some charts displayed on them, trying to do some sort of analysis. Whatever they are doing on the monitors, analyzing the past price movements to forecast the future price movements, these are all technical analysis, called technical analysis, or in other words, also called as charting. Now, which is important and which is not important, that depends on what trading objectives a particular individual or participant has. So a brief difference between the two. So by definition, fundamental analysis is the value calculated using various economic factors. So for example, what is the inflation rate going? What is the unemployment rate going? How is the GDP of the particular country, for example? And if we are talking about the companies, what is its liquidity position? What is its gearing position? What is its profitability position? How is the dividends? What are the earning per shares, and etc. 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 These all economic factors, microeconomic, that is company level, or macroeconomics, that is country level, all factors are being considered. Whereas technical analysis is about using price movements and patterns on charts. So here we are discussing that it is all about charting, it's all about charts. And the objective is to analyze the past price movements to predict the future price movements. So these are the basic, absolutely independent two analysis. The data used for this is for fundamental analysis. There is a lot of things to be considered: different reports, economic reports, financial reports, the news, events, industry statistics, etc., etc. Whereas technical analysis only involves the chart analysis. It's all about analyzing the charts. Asset bought and sold. According to fundamental analysis, it is all about deciding the intrinsic value of the asset. And as we discussed in the previous session, that if the intrinsic value of an asset is, let's say, for example, in Pakistan, a share price, a share of a particular company should be priced at its intrinsic value of 500 rupees per share. But when you enter the market, when you analyze the market, you find that the market price is actually at the very right moment 430 rupees, which should have been 500 rupees according to the analysis. So it means the market is undervalued, or in other words, the traders in the markets are underreacting. So there is a margin of profits because the prices have fallen, and it will go back to its intrinsic value. So it is all about the analysis according to the uh, a quite lot of intellectual analysis. Whereas charting, it is all about the trader sees price formation. This is important, and we'll be doing all this today. So it's about analyzing the price formation, how the price is moving. This thing is also known as price action, a very popular term used in this market. So it is about the price action, that is price formation, that has high probability of moving in profit in the near future. So we predict in the near future how the price is moving and where it is directed, what is the direction of it. Fundamental analysis is mostly suitable for people who consider investing for long term, which includes for many days or many weeks or even for months. Some people even hold for years. So if anyone want to hold an asset, want to invest in an asset and want to hold it for a long period of time, then fundamental analysis is definitely a must. But if anyone is trading on a short-term basis means, which is known as intraday. Within a day, you want to get out after taking the profits uh, for minutes, and few people even trade for seconds as well. So for if you want to trade for minutes and hours or for a day or two, then mostly technical analysis is more fruitful. And most of the people, because of the human factor, prefer short-term profits as compared to long-term profits. So these are the two basic differences. Fundamental analysis, we'll be discussing it about in the next coming session day after tomorrow. Today is all about the technical analysis, also known as charting. That is, it's about chart analysis. So before we start, I will relate to an event which happened when I was taking the last session. In the last session, that is on 28 September, I showed you a live chart of the dollar index, that is US dollars, and I informed you that incidentally at that particular moment when I showed you the live chart, I told you that it is a technical breakout and the prices will go to up to this price level. I informed you in the technical position. You must be having the recordings of that. You can revisit and check that. And I also told you the forecasted position. Let's see what happened after that. That is on 28th September, I told you. So this was the chart I displayed live. At that moment, it was live. Then I took the screenshot so that I can share with you in the next period. When I shared the screen with you, this event was happening. We were somewhere here. The recording must be with you. And at that particular moment, I told you in the live session that the prices are going to move over here with a minimum of 113,100, the price value. So my prediction, that is not prediction, actually forecast, accordingly was that it should move over till here. And in fact, that reached over there very easily. So this is how the technical analysis works. So this is how profitable a sound technical analysis can be. You analyze the past price movements, you analyze the charts, you see what is happening, and accordingly you forecast and make profit. So this is all about technical analysis. So now step by step I'll be taking you through different parts of technical analysis, but obviously speaking, because of time limitations, of and it's not possible to discuss each and everything, but I'll try to give you the maximum flavor possible in this limited time period. So formally speaking, technical analysis, as we have already discussed, is an attempt to determine the future price. We use the charts and graphs to determine this. And the objective is that we want to determine the trend where the prices is directed so that we can take advantage of it and accordingly fruit some profits. Now, first point to know about technical analysis is that the markets, that is the price direction of any asset in any market. Remember one thing I have just informed, I would like to repeat. This technical analysis which we are discussing is true for all sort of financial markets. This will remain true for stock markets, for any shares of any company. It will remain true for currency markets, that is forex, true for cryptocurrencies, true for any commodity, name any. So these, what we will be discussing today, is a common factor which applies to any sort of asset in any financial markets. So if we uh, analyze the price action of any asset, we first of all identify that where the trend of the market is going. Where is the trend? There are three possible scenarios for a price to move. One is the upward trend, known as bullish. Bullish market means the price is going upward, or the particular asset which we are analyzing might be going downwards. It might be downtrend, known as bearish, a bearish market. And there is a possibility that the price is not able to go upward, neither it is able to go downward. It is stuck in between. It is not fluctuating. If that is the case, we say that it is a consolidation period, or in other words, it's a sideways trend. So there is only three possibilities. There is no fourth possibility. Either the markets are increasing, either the market is decreasing, or the market is constant, that is stuck in a very small range, that known as sideways trading. So to illustrate the example, this sort of thing is known as bullish market. So as you can see that the prices are moving upward, bullish market, very easy to identify. Without doing any analysis, anyone can see that the prices are going upward. This is known as bullish market. And if the prices are going downwards, without doing any analysis, anyone can see and say that determine that this is a bearish market. So either it's bullish or bearish. But if this period is considered, this period which I have just circled, this is basically sideways. This is no direction. The prices are stuck in a particular price level. But after there, the prices went down. So at the moment, this market is a bearish market. So either the prices are going upward, bullish, sideways, that is stuck in a range, or going downwards, that is bearish. For charting, there are two popular chart types. One is the line chart, that is the price of an asset is seen in this manner. The closing price of a particular time frame is noted and the chart moves in this fashion, known as line charts. But the most popular and the one who often do trading rarely use line charts. Most of them use candle charts, that is Japanese candlesticks. These are shaped in this manner, and we'll be discussing about that. Candles are more meaningful, and this technique is developed by the Chinese a century ago. Actually, it's not a latest development. If you are using a candlestick chart, then each time period gives you a lot of information. For example, in this particular 1 hour, if I see this sort of candle, it would mean that in this candle you can identify the highest price which went in this 1 hour period, the lowest price which happened in this 1 hour period, and what was the opening price, that is at the start of 1 hour, and what is the closing price. So for example, just to explain the point, let me assume that I am checking the market from 5 p.m. to 6 p.m. just for an example, a 1 hour period. And what I find is this sort of candle. So in this sort of candle, the information available is that this is the maximum price this asset went up to. This is the lowest price. At exact 5 p.m., the price was over here, that is the open, and at exact 6 p.m., the price was over here, that is the closing price. And vice versa for the other side of the candle. Traditionally, the colors used are, if it's a green candle, it means the direction is upward, that is bullish. And if it is a red candle, it is termed as bearish. It's not necessary to color green and red actually, but it's just a tradition. You can color anything. But as a tradition, green and red combination is used so that your eyes can identify that where the market is moving. So if it's a red candle, it means that the market opened at 5 p.m. over here. This was the price level. At exact 6 p.m., the price was over here. That is the closing. The highest price gone in this during 5 to 6 p.m., anywhere in between. The highest price reached was this one, and whereas the lowest price was this. As you can see, the candle formation has a body and these needles above and below. These needles are known as wick. The terminologies, jargons just being used. So it has a body, that is the color, and needles, which is known as wick. And the candles can be of numerous formations, which has a lot of names given to it, associated with it. So for example, such sort of candle with small wicks up and down and a big body, it's a long candle. If the candle is shorter than the previous, we say short candle. A candle with no wick, that is no needles above and below, is known as marubozu, just a name given to it. Similarly, this candle, if I talk about it, a small candle with big needles and a very small body, but it has a body actually, is known as spinning top. Similarly, a green candle with a body very below and a very big candle upward is known as inverted hammers. Knowing these names is not important at all. Actually important is the formation so that the prediction can be made, the forecasting made, that where the market, the price of this asset in the market is moving. So there are a lot of names. This is a very popular one, a candle with no body. It doesn't have any body. This is known as doji, a very popular candle as well. So there are candles with bodies, and if this is the candle, it means that the market is indecisive. The price opened at the same price where the price closed in this particular hour. So there are a lot of formations, but needless to go into details or just to try to read their names. In fact, if you ask me, I have been trading in for 22 long years. I'm very much familiar with each and every candle, but I'm familiar with its formation and its trends and its implications. I actually never got bothered to remember about these names. It's meaningless. What is the purpose of learning these names? However, some important candles you automatically get to learn their names. So these are the types of candles according to which you can analyze and forecast that what the prices are possibly going to direct in the forthcoming period. And with the combinations of the candles happening, you are able to predict with different formations that where the prices should go. So for example, bullish pattern means that the prices are going to go upward. And if we analyze the candle, there are some very popular candles which identify that this price will go upward. There are a lot of combinations, and we will be discussing just a few just to have a flavor of that. So for example, this candle, I'll be just giving you an example of this as well, a practical example, known as bullish harami. Obviously, if the Urdu speaking people must be interpreting this name with something else. It's just Japanese, and I don't know why this sort of names are used. So bullish uh, harami candle is where a red big candle is followed by a small green candle which opens and closes within the body of the previous candle. If that is the case, it is a very big indicator that the prices is from here onward, the prices is going to go upward. Now, instead of just remaining theoretical, I'll like to give you some practical examples as well. So to give you an example, a recent happening I'll show you in GBP USD, that is Great Britain Pound. Okay, and I'll show you a recent happening. Just look at this candle. This is live chart. Okay, so here you can see this is a bullish harami, which is a big red candle followed by a small green candle, a candle body opening and closing within the previous candle. So this happened 5 days ago actually. And as you can see, this was such a strong analytical point that from here onward, you can see the market comfortably moved upward. And if anyone can forecast that where the prices are heading, obviously speaking, hell of profits can be made. So this is how the candlestick analysis helps to forecast. So coming back to the slides, there are a lot of patterns, and at the very right time, at the very right moment, understanding each and every thing in a very short period of time is obviously not possible and needless to do so. But here in this slides, which will be available to you after this session, I have just jotted down a few popular ones, and I have just given you a practical example of this which recently happened 5 days ago, and still 5 days before a bullish harami appeared on British pound, and since then the prices even up to now is just rising. Similarly, there are bearish patterns as well. So bearish patterns, a lot of bearish patterns, including harami candles, bullish and bearish engulfing. Bearish engulfing means that the green candle is followed by a red candle, and the red candle basically exceeds the previous candle. That is, it just crosses it. In other words, pierce it. So this is also a very, very popular thing, and I'll try in a little while to show you some practical example as well about this. So there are many formations, but needless to know each and every formation, absolutely needless. You just stick to a few of them with which you are comfortable, make a plan for yourself, decide your investment strategy, your risk strategy, your return strategy, and accordingly you execute your trade plans. But yes, there should be some indicators. So I'm using the word indicator, which indicates you that where possibly the price is headed. In those indicators, one of the indicator is the Japanese candlesticks, which I have just explained you in a very brief. There are many, many candlestick patterns, and only few of them, in fact, needs to be discussed. And in this session, it's all about giving you a flavor that how the things are moving. So coming back, uh, here I will not be able to draw a line for you, but if you can see my cursor, you can just identify the bearish engulfing I just marked just now. This is bearish engulfing. You can see over here, bearish engulfing. Bearish engulfing means that a green candle is followed by a red candle, but red candle is so big that it just pierces, that is exceeds sufficiently the previous green candle. Like you can see over here that this exceeds sufficiently. This is bearish engulfing, which indicates that from here onward the price will go downward, that is it will go bearish. And you can see in this practical real life chart that uh, the prices after here just went downwards. Here also you can see, just see over this bar where my cursor is moving. This is also a bearish engulfing, and in this bearish engulfing you can just see that the red candle just exceeded sufficiently the previous green candle, which indicated clearly that the prices are going to go downwards, and it did go in fact. So this is how the candlestick analysis helps you to identify the next price direction, and you can take advantage of it if you are familiar with these sort of skills. But technical analysis is not limited to candlestick patterns only. There is a lot of thing to be done to make sure that uh, your analysis is profitable and you are not deceived by any wrong sort of analysis. The next thing very important in technical analysis is known as support and resistance. Support and resistance are price levels where the prices reach but are not able to cross. For example, I would like to give you an example of Pakistan rupees in today's scenario. If you check the chart of Pakistan rupees, for example, you will be able to find that at the very right moment, the resistance level is 148. That is, in recent weeks, recent days, recent months, you have found that the prices per dollar reached to a price of 148 at maximum, and after then it just went down. It was not able to cross it. And similarly, these weeks, if you check the charts, you will be able to find that in today's scenario, you will find a price level of it's actually 248 and 222. 222 is a price level known as psychological level where the prices do reach, but is not able to go below that. It just goes back near to 230, 240, 248. So these are known as psychological levels, and these always work out. You have to find these psychological levels in your charts. So for example, I found 248 for Pakistan rupees as a resistance and 222 as a support. Means in this analysis, when the prices will come near or will touch 222 rupees, it will just bounce back, and it would be very difficult for it to cross the 248 level because it's a psychological level. Means the government doesn't want to take the blame of exceeding this exchange rate. So you find that the Pakistani rupees is just fluctuating between 222 to 248, 222, sometimes it's 230, it's sometimes 224, it's sometimes this one. So it just keeps on moving in between. If you are able to find this sort of support and resistance, so the level above the top level where the prices is not able to surpass it is known as resistance. The price level below where the prices is not able to cross down is known as support. So if you are able to find the resistance and support, this is itself a very profitable uh, strategy. You can find a very profitable situation. So for example, after seeing this session, if you want to experiment, so as the prices go near to 222, you can actually go to an exchanger and just buy a few dollars what you can afford, and you can expect that it will go near to 248 in the forthcoming period, maybe a few days or maybe a few weeks, and this can bring you a good amount of return depending how much you are ready to invest. So this is known as support and resistance levels. But in technical analysis, it is not necessary to be horizontal lines only. It's not horizontal lines always. It can be this sort of line as well. If, for example, the market is an uptrend and the prices are increasing, so you find that the prices are not horizontal, but these are these sort of vertical, that is trend lines. So you are able to draw these lines and you find that actually it is working. So what happens is when the prices touch the above level, which is known as resistance level, the prices bounce downwards and hits the support level. And when the prices are downwards, that is support level, you just buy the asset and the prices will go back to the resistance level. So in this manner, you keep on buying, selling, buying, selling, buying, selling. These are very popular methods known as scalping. That is, you trade for a few minutes or few hours or maybe a day or two, remaining within these resistance and support levels, and you make a good amount of profits out of that. So this is a high profitable opportunity. So having said this, uh, now before going to the live charts again and giving you an insight accordingly, I would like to add a few more things before jumping into the live charts for you. Along with the candlestick patterns and support and resistance, there are the price sections which form a particular pattern. These are very important and very profitable, provided you are familiar and are able to identify them. There are a lot of patterns, and we'll be discussing some most popular of them, and then we'll be going to live charts to give you a flavor. So this sort of formation is known as cup and handle. What happens is the price is going upward, then the prices try to go downwards but is not able to go below the support, and it just again turns upward. But the fashion is some sort of a round shaped, known as cup. So it goes in a round shape fashion. Once it reaches this level, this level, that is the resistance level. The prices will hold for some period known as consolidation period, sideways movement, but once it is broken, it is a very clear pattern that the prices are going to go upward. A big upward movement is on the go. So you just open a chart and you find this sort of momentum. So here it is where you plan, you enter a trade, and you profit accordingly. This pattern is known as cup and handle. Another popular chart pattern is very popular name, head and shoulders. Head and shoulder is basically a chart pattern in which the prices move in this fashion. The prices go upward, then downward. It's not able to go below a particular point, then it rises above. And if I say that it's a sort of hill sort of formation, so the next hill is basically bigger than the previous hill, and then it goes downward, is not able to cross this level, and then again makes this sort of hill before going and breaking downward. This sort of pattern is known as head and shoulder pattern, and the traders look for this pattern all the time. Head and shoulder means there is a big head and left and right shoulders in this price action. Once this is broken, it would mean that the prices is going to go downward, and it's a very profitable opportunity. I'll try to show you this in live chart. Hopefully, if we are able to identify in this limited time. Head and shoulders, for example, in this pattern, this is head and shoulder, left shoulder, head, right shoulder. The prices broke down, that is, this is the neck, that is, prices was not able to go below this, and once it is broken, the prices is going down. And this is a lot of amount of money if anyone trades in this fashion. But the head and shoulder can be an inverse head and shoulder as well. That is, it can be from bottom as well, so known as inverse head and shoulder pattern. Means the prices is moving in this fashion that you can identify a left shoulder, a right shoulder, and a head below that. If that is the case, as soon as the neck is broken, it is an indication that the prices are going to go upward. And obviously, once you are able to predict the movement, you can make a lot of profits in these financial markets, because of which these financial markets are very popular. And as I told you in last previous session, there are trillions and trillions of dollars being traded every single day. And according to statistics of 2022, according to Google, just you can go and search on the Google. According to Google, at every given minute, there are minimum of 10.2 million traders trading in financial markets. So 10.2 million people at every given minute. Obviously, this is an average. At some point of time, there is a possibility that the traders are like 15 million, and some particular time there could be 8 million, but millions of people at every minute are trading. So this is such a huge market, and that is why these patterns, price actions do keep on happening, and profit opportunities keep on arising. Okay, so next pattern, I'll be to make it lively and keep it interactive, I'll be taking you to live uh, charts in very little moment. Before that, I need to just explain you a little more patterns. The next pattern is known as rising wedge or falling wedge. It is an uptrend, and the market starts to show this sort of pattern. This is known as rising wedge, and this obviously provides an opportunity of buying and selling. For example, once you identify that this is a rising wedge, here you can buy an asset, and accordingly, when this rising wedge resistance is reached, you can accordingly sell this asset, and in between, this is your profits between the two levels. That is, this is resistance, this is support, the terms I just introduced you a little while ago. And if it's a falling wedge, even then you can do the same thing. For example, if you identify this falling wedge, so here is the business, here is the profit opportunity. Buy over here, sell over here, then wait. When it touches it again, buy over here, sell over here, and keep on repeating to make profits unless this pattern is changed to something else. So this is a very popular pattern as well. Perhaps among the most visible and very frequently appearing are the triangles. The triangle means that when you draw the support and resistance line, it forms a triangle pattern, and the prices are in between this triangle for a reasonable long period of time. And ultimately, the price has to go somewhere. Either it has to go upward or downward. And once this triangle is broken, that is, the prices move above that, it means that this is a very highly profitable opportunity, and the prices is just going to uh, go upward massively. This is if the triangle is in such a way that the above line and downward line both are coming in this manner. This is known as symmetrical triangle. But the triangle pattern can be in this shape as well. This is known as ascending triangle, in which the break is most probably going to happen upward instead of downward. So what happens is that the resistance line is straight, but the support line is upward. So you wait until this is broken. In case it is broken, like in this diagram, this is a very highly profitable opportunity. You buy at this position because it is confirmed. The word confirmation is often used in this market. It is a confirmation that the prices are going upward, and accordingly you can make a lot of profits out of that. So there is a symmetrical triangle, but symmetrical triangle can not only break upward, it can even break downward as well. So you wait for the break upward or downward and you trade accordingly. But the ascending triangle breaks upward according to this pattern, and descending triangle the opposite of that. That is, the support is straight line, but the above line is declining, forming this sort of shape known as descending triangle. This triangle, if there is a formation, it will break downward, and once broken, it is a very profitable opportunity to enter the market. So here I would like to add one thing. When, as I told you, that I have been teaching for 19 years to ACC students, and thousands of students have been tutored by me. And by the grace of Allah, I did enjoy a lot of fame for myself. Even today, if you try to find a student of mine in your circles, you will be able to relate my name with in this market. So what happened is that I remained a teacher of F9 P4 in this in which financial markets, not in very depth, but there was a slight touch of that. And also there was discussion about the derivatives as well. Hopefully you know about derivatives. So most of these uh, attendants of the class were unfamiliar with the fact that it is not that the profitability only exists if you buy first and sell later. It actually happens also the other way around. So what I mean to say is that normal uninformed people think that whenever you have to make a profit, you actually buy first. You first buy a thing, and later when the price increases, you sell the same thing, and you can make profit out of that. But most of the people are unfamiliar that actually the other way around can also be traded in this market. What happens is that you can sell first. For example, at this price I sold the asset. You can sell first sell it, and when the prices are lowered, you buy later. Obviously speaking, obviously speaking, the profit can only be made if the buy is at a cheaper price, that is 100 rupees for example, whereas the sell was at a higher price, that is 120 rupees. The profit will be only then. But the pattern of buying first and selling later is not necessary. You can go the other way around. You can sell first and later buy the asset. This is a very normal transaction happening in the normal world, not only in the financial markets as well. I would like to give you an example which I often used to give to my classroom students as well. Just listen to my example to develop your understanding. For example, I go to a shopkeeper and I ask him for a particular grocery item. For example, I go and ask him for a particular chocolate. Let's say I want to buy a chocolate, um, for example, dairy milk, a chocolate named dairy milk. I want to buy it. I went to the shop and I asked him for the chocolate, and the shopkeeper told me that he do not have the chocolate at the very right moment. But I was desperate to have that chocolate. So what I did is I gave, for example, 200 rupees to the shopkeeper. Just listen attentively. I gave 200 rupees to the shopkeeper despite the fact that he does not have the chocolate. And I told him, my instructions were, kindly, when your supplier comes, do buy a chocolate for me, have this money as an advance, do buy, the next time I come to you, I'll pick my chocolate. So what happens is, the shopkeeper has not bought the chocolate yet. He doesn't have the stock. It does not have it in his stocks. But what happened is that me as a customer went to the shopkeeper, gave him money in advance, and told him to buy for me when he is able to do so. So as soon as I gave him my 200 rupees, actually the shopkeeper was able to secure his sale. He has already sold to me despite he does not have the chocolate. Once he got the money from me, money has been given. So sell happened before. First sell happened for him. After 2 days, the supplier came of dairy milk and the shopkeeper was able to buy the chocolate for me, and he bought from the supplier, for example, for 180 rupees. So first he sold, later he bought, and he was able to make profit. But in this real world scenario, which happens to all of us all the time, just consider the shopkeeper. He did not have the stock, but the customer gave him the money, so he already had made the sales without doing any buying. He did the buying later onward. This is how the real world trading works. The grocery shops and the supermarkets all you visit are basically traders. They are not manufacturers. He just buys a bread, he buys eggs, he buys chocolates, he buys cereals and everything, and just sell it. These are pure traders, exactly the traders like we are in the financial market. So in trading, name any trading in this world, it is not actually that we buy first and sell later. It is very normal to do the other way around. Sell before, buy later, and make a profit. Yeah, but obviously speaking, the buying price, whether you are doing first or second, must be lower than the selling price. The profit can only be made that. Hopefully you got an idea. Hopefully you got an idea. Maybe with this point, but I have witnessed over my long period of teaching career that many participants are not that sound in this concept. Okay, so to you. Anyone indicate me because I should consider closing some. Can you think it's now better? Okay, so anyways, next pattern, double top pattern. As I told you, to make this session lively, I'll be showing you in the live charts as well. So double top is a price action, that is an asset moves to a resistance. This is the resistance level. The prices go to the resistance level, touches it once but is not able to cross, touches it for the second time, is not able to cross, and the prices start to go downward. If this happens, this is known as a double top pattern, a very strong powerful pattern in which the direction is very clear that from here onward the prices are going to go downward. And once you are able to predict the price levels, then you can easily profit out of them, make a profit out of them. Similarly, the next pattern is known as double bottom pattern. It's the vice versa of the previous. The prices come below and touches a support level once, goes above and touches the support level on the second time, but is not able to cross it below. If this happens, this is known as bottom, double bottom, and this is a clear indication that the prices from here onward is going to go upward. And if the direction is known, profits can be made very easily. So there are many chart patterns and only a few of them have been discussed. Obviously, we are limited by time and the scope of this session. So to make it lively, I just closed the session only because I was afraid, I feared that my voice was not clear. So I'll try to open it again. So, okay, luckily the prices are over here. Ah. Okay, so coming back to the charts. Okay, so coming back to the charts, we just discussed a few of the patterns. Now I'll find another pattern and show you how this works. Now just look at here. Any chart can be opened. It's not about a particular chart. Okay, so for randomly, I'm just using any random chart which I'm able to see. So let's see, let's say again Great Britain pound, just for an example only. If you see over here, just check it. If you see over here, you can see the double top pattern. The price touched once, the price touched twice, the second time, but was not able to cross it. Once that happened, it was a very clear indication that from here onward the price is going to go downward. And as you can see, from here onward the price moved downwards significantly. If anyone would have taken this, it could have been an unimaginable, a very big profit opportunity. So this is about example, and I'm finding patterns for you just to make give you a good flavor of what we are all discussing at the very right moment. Okay, so um, so for example, now to identify, I'm just doing it live, so I've not just prepared it. So let's see what is happening live over here at this very particular moment. And if we see the pattern, now the pattern just going on, to give you an idea, a trader would trade something like this. He will find what is the trend line at the moment it is going upward. Then he will find the another trend line which is known as accelerated trend line. This is going upward for the right. Now we need to find the top level till where it can go, for example, and the above side resistance is not yet visible, not visible at least now. So there's not a trading opportunity at the very right moment. But if I can show you this, here you will find that previously a symmetrical triangle, just look at this, just not very far away, a few hours ago, this is an hourly chart, a few hours ago a symmetrical triangle just broke this one. I was telling you that the strength of a symmetrical triangle. So this is symmetrical triangle, not ascending, not descending, it's just symmetrical. And this symmetrical triangle just broke. When it was able to break, you can see the prices significantly moved upward, means there was a lot of profit opportunity over here. So this is how symmetrical triangle works. And similarly, if we keep on going and analyzing, the patterns keep on happening and repeating from time to time. So this is how technical analysis works. So till now, I have just given you two flavors. Number one, the candlesticks does give you meaning, and you are able to forecast with certain candlestick patterns, which help you identify where the price is moving. And secondly, the second flavor I gave you is that there are chart patterns, if properly identified, that itself give you massive profit opportunities in these financial markets. And these can be, this is not necessary that this is about currencies or cryptos. You can do it on any asset you like. Okay, so to give you an insight, let's say I'll go for stocks. Now there are so many of stocks of different countries. Now it won't be possible to identify a particular stock very easily. So I'll just pick any. Okay, so just I just remembered Boeing, for example. Okay, so this is Boeing, that is a stock. If you want to wish to trade the stock, you can analyze the pattern. I just keep a note that I do not trade in Boeing actually. So I haven't analyzed this. I'm just analyzing live with you to give you a flavor how this works. So here, if I can see a very clear support line exists, the price is not able to go below this. So this is a very good buying opportunity, provided some sort of uh, break or symmetrical triangle or head and shoulder or any formation is made over here. For the time being, when I speak, at least when I'm speaking, it is, there is no clear pattern at the very right moment. But yes, there is one movement which is not included in this notes, which I told you today. As I told you, this is a big subject. So here you can see that this was a resistance level which is just broken. So here onward, the prices will go above. Though I am not interested in doing Boeing, but you can check after a few days, you will find that the prices will reach easily up to $130 per share, very easily. So if anyone want to buy the share of Boeing, this is at the moment very reasonable buying opportunity. One, you buy it for 124, targeted for 130, that is this level, and you are already on the profit mode. So this is how it works. It doesn't work only for cryptos or only for stocks or only for currencies or only for anything. It works for any. Just name it. So technical analysis is undoubtedly very profitable technique and a must for all traders. Okay, so before reaching to conclusion, the next technicals are about indicators. So this is the third flavor. The first flavor I gave you was about Japanese candlesticks. The second flavor I gave you about the chart patterns. Now the third flavor I am giving you is about indicators. These markets have existed for at least more than a century. So history, according to history, this financial markets, about commodity markets and stock markets, just flourished after the Second World War. And Second World War happened, sorry, First World War. First World War happened a century ago. So after the First World War, there was active participants and people just traded in the financial markets. And since then, a lot of research have been made because millions of people and a big amount of money is involved. So therefore, uh, there is a lot of research in it. So many statisticians have done a lot of research, and there are many very effective indicators, that is programs, readily available. You don't have to do anything, you just apply the program that also indicates you where the price is headed, and you can take profit out of the opportunities. Among those indicators, one indicator which is very popular is relative strength index, known as RSI in the short form. Remember, you don't have to do anything, these are ready programs. So in this, what happens is, this is RSI. In this indication, there are two levels, two lines I'll just draw for you. So one line is this one, automatically incorporated, and second line is this one. These two lines are observed. If the prices go below this level, it is known as oversold price level. The prices actually are these one. Indicator is showing the oversold, which means hereafter the prices are going to go above, and in most of the cases, there are exceptions, but in most of the cases this do work very nicely. Similarly, if the price goes above the certain level, it is known as overbought, and the prices hereafter indicates, according to this indicator, that the prices are going to go downward, and you can profit from the fluctuating prices very easily using this very famous indicator known as RSI, and majority of the traders in the financial markets use this indicator. The second indicator, also very popularly used, is moving averages. Some of you, because of your ACCA studies, must be familiar with the moving averages. However, here we don't need to calculate the moving average. You just give a command to the program and the moving averages calculate automatically. You only need a visual to decide whether you are going to buy or sell the asset. So these moving averages, for example, show that where the prices are headed. If the price is above the moving average, here two moving averages are used. One is the moving average of 10, that is 10 candles, and the second is the moving average of 20, that is 20 candles. So two moving averages are used, and as per the how to use this indicator, that is moving average, it is all about, if the prices are above the moving averages, that is above the both moving averages, like here above both, it means that the prices are going upward and you can profit from this opportunity. And similarly, if the prices go downward, yeah, this is actually not an exact example. I can so this is an above example. Actually, what should happen is that this price is not a sell. The reason is that the 10 EMA should be below the 20 EMA. If that would have been happen, then the prices would have gone down. But here, the moving averages 10 is above 20, which means that the prices are above. Vice versa would be the 10 SMA would be below 20 SMA. That the blue line If is below this orange line, then it is that the prices are going downward and the sell opportunity can be taken. But till the moment this blue line, that is 10 SMA, is above the this orange line, till then the uptrend prevails and you can take this indicator to trade upward, that is buy now, sell later. So RSI, moving averages, we are just discussing the popular ones. The another very popular indicator is MACD. The full form is moving average convergence divergence, but always we just refer it with its short form, that is MACD. This is also an automatic program. You don't have to do anything. You just have to observe the visual. The visual is there are histograms over here. If this line, which is automatically in the program, exceeds the histogram, this indicates that the prices are rising and you can benefit from the rising prices. There are obviously multiple implications for each indicator, and it is not about sticking to a single particular indicator. Every indicator has its own pros and cons. Many people even don't use indicators, and some people just rely absolutely on indicator. It is a personal choice, or in other words, it's a personal strategy, uh, how much you want to depend on a particular indicator or on a particular pattern. It's all about strategy, how you want to, it's your trading pattern, your trading philosophy. Next indicator I have included in this notes is because it's a very popular one. It is known as Fibonacci. Fibonacci is a person basically, and his statistics research is very popular among the financial markets. One of the Fibonacci very popular research is about retracement. Retracement is, just look at my drawing. The prices actually moves in this fashion, always a zigzag pattern. It is never a straight line. So Fibonacci happened to make a research on all the assets, including metals, including stocks, including bonds, including currencies. And in his vast research, he was able to come up with a research outcome that how much in this zigzag pattern does the price move. For example, the price just moved from here to here. Okay, so these are two levels. This is the low, this is the high. But because the market does not move in a linear fashion, it is always a zigzag pattern. So in this zigzag pattern, how much will the price come downward? It has gone upward, then it should come downward as well before again going upward. How much it can come downward? This is known as retracement. So how much it can retrace, how much it can come down. So Fibonacci was able to come with 4 levels that when this zigzag pattern happens, the price goes up, then it will come down on one of these 4 levels. One is 23.6%, the other is 38.2%, the next is 50%, and the next is 61.8%. And this statistics is so much accepted by all traders, all institutions involved in these tradings, that it has gained enormous popularity, and many people profit a lot because of using this Fibonacci retracement levels. For example, in this price, it's a zigzag pattern. It just went upward in a linear fashion. Then it had to come down. Always prices go up and down. It does not go in a linear fashion, never. So in the zigzag pattern, it was supposed to come down. Now the check was that up to what level it can come down. So in this particular chart, it came back to 50%. That is how much it went upward. It came backwards, that is retraced back to 50% before again resuming the direction. Very popular tool. So Fibonacci retracement. So these are also indicators. And To move towards the conclusion, there are many indicators, and I can tell you there are hundreds of indicators. It's not about 5, 10, 20, 25, 30. No, there are hundreds of indicators, hundreds. But no trader need to know hundreds of them. He just need to know a few, very few, just one of them or two of them or three of them or four of them, more than enough. And then he makes a strategy how he's going to trade, what levels he's going to trade, at what support and resistance level he will be trading, what candles he'll be waiting for. So he will just be selective, very selective. And among those selections, a few of them, for example, I would say just two indicators are more than sufficient. A few candle patterns are more than sufficient. A few patterns, chart patterns known, are more than sufficient to make a fortune out of this market. But yes, because millions of people are trading all the time, this market, especially the currencies and crypto markets, is a 24-hour market. Stocks is obviously only working hours market, a small market. Stock market is actually small market. But the remaining markets are very huge, immensely huge. Trading is in trillions of dollars, and so that is why there are so many participants, so many preferences of different people. So though so that much of indicators exist. So there are hundreds of indicators, in literal sense, hundreds of indicators. But I told you, no one ever need to know hundreds. You just stick to a few of the flavors I gave you, and you can always make a lot of fortune out of that. Okay, I was able to give you a real live charts flavor. Now a real case studies I would like to discuss you to make the point that these analysis work for all sort of markets, whether it's stock, it's commodities, it's currencies, it's cryptos, works same for everyone. I have taken 4 case studies, real case studies. What I have done is taken the screenshots, and I'm presenting that to you, so that just now a few minutes ago I was showing you live, but in live to show everything is not very really possible. Some events had happened a few hours or few days before, so I have just taken screenshots to show you that how technical analysis are done. And to make the point, I have used Tesla to show you that stock market also move in the same fashion. I have used crude oil to show you that crude oil also moves in the same fashion. I have used one currency, Canadian dollars, to make the point that currencies also happen to move in the same way. And then I've used cryptos, all sort of financial markets, one asset from each. So the real case study, this is real screenshot. I have taken these screenshots just to explain you. So here Tesla in recent months, what happened is it reached its lowest level, that is $66 per share. At that particular moment, the RSI, I just introduced you about this indicator, was automatically showing that it is oversold. It just touched and crossed the lower level. Here, the prices were at the lowest, which meant that from this moment onward, the prices is supposed to go upward. But the trader just don't trade after seeing the oversold. He will wait for the chart pattern as well. So the chart pattern was a symmetrical triangle, and this was broken over here. Anyone who would have tapped this would have made immensely huge amount of profits, because after that Tesla just skyrocketed in its price. Not only RSI, there is one more indicator very popular known as awesome oscillator. As I told you that there are hundreds of indicators. It also showed a divergence, and at that divergence point there was a breakout. So awesome oscillator, as soon as it showed the divergence, there was a breakout, which clearly meant that the prices are going above, and this was a very good buying opportunity. On the same chart, same example. Let's say I had taken a buy from here, you have taken a buy from here. Now what should be the profit target? Where, up till where should we expect that the prices should go? So according to Fibonacci research, there is a research known as expansion, that till where the prices will expand, and there are three levels of it automatically drawn. You don't draw it, you just apply it, it draws automatically. So that showed that the minimum price was this much. Once broken, it will go over there. If this is crossed, it will go up to there, second level. And there are three levels. And if this is also crossed, then the third and last level is this, which can be seen by indicator. After this, no one knows the prices are going upward or downward. But this itself is not less than 100% margin. For example, this was 66 over here, but when it reached over this target price 3, it was already 180 plus, that is 200 plus profit, 200% plus profit was already made. But the prices kept on rising. If you are a regular trader, after that the same analysis happened, that afterwards over here, this area, a clear symmetrical triangle was formed, a clear one, without any ambiguity. A clear symmetrical triangle was made, and once it was broken, prices again skyrocketed, and the prices could have been taken over here. Overall, this movement in a matter of 10 months, a price of 66 moved to a price of 900, which obviously is much more than 1000% of profits, which obviously the traders can take it. Some traders were able to take it. These are real case examples. Now, giving you the next point, the flavor. I have used the moving is below the moving average. The price level goes above the moving average, it will become a buying opportunity. So for example, this was a very strong support recently. Once it was broken, the prices were below moving average. Here, if someone would have sold, he could have waited unless the price moves above the moving average again. If the price moves above the moving average, the trade is closed and all the profits from here to here can be booked, and vice versa. Once the prices goes above, you can buy over here, this is the buying position, and wait till the moment the price goes down. The price goes down over here, so this all is the profit area, mostly in the same fashion. So all the assets, name any, moves in the same fashion. This is known as price action. But to make the point in these slides, uh, at one point I have used a screenshot to show you how RSI works. In one screenshot I have just exhibited the awesome oscillator and the technical breakout. Then I have just on the same chart I have used Fibonacci expansion to only give you an idea how it works. Then I have used MACD divergence and symmetrical triangle on the same chart. That is the same chart. The different indicators I have used just to show you that how the trading works. And here the moving average, for example, is used intentionally by me so that I can show you that how the moving averages are used. It could have also be used for Tesla as well. Means same. Now USD CAD, that is Canadian dollars, there is a very strong resistance level, very strong one, that is 1.466. It touched once over there, it touched second time over there, but was not able to go above. It was a clear indication, a very big indication that the prices are going to go down. So it's a currency, and a double top was very visible. Actually, I was able to show you double top in the live session as well, live market as well, incidentally. Coming to cryptos, so now about cryptos, again, my advocacy is the same. that technical analysis works in the same manner for all the assets, irrespective that which financial market it is. So Bitcoin, for example, this was a symmetrical triangle. It broke, and after that broke, it had to go above. A very clear analysis. It did consolidate for some time, means it broke and consolidated, that is, it remained sideways for some time before eventually skyrocketing to an enormous $61,000. Over here, it was around something like $1,400. But when it skyrocketed, it went up to $61,000 in just a matter of very few weeks. That is why Bitcoin and cryptos became very popular, because of this potential of high possibilities. But having said this, the trained ones, the experienced ones, the proper who just know, is familiar with how to trade, has some mentor with him, is obviously in a better position to gain, rather than someone who just simply jumps into the market thinking that it is something that anyone in this world can do. Actually, there is no such thing as anyone can do. There was never any such thing. There is never any such thing. Everything is a skill. So to summarize my point, technical analysis, that is charting, is a skill in itself. You need to know this skill actually. And once, it's not a very difficult skill, it's a very interesting skill actually. If you know this skill, then as a trader, it provides you with sound profit opportunities. But needless to say, you will come across many people who complain you that I have traded in stock market, but it has cost me a lot. I have done a lot of losses. You will very easily find people who will, you will find people complaining about forex market, that is currencies, that this is not okay. Some will blame like the grapes are sour, for example, this is not right, this is not Islamic, something, anything, any, because it's a failure. So easy words. And similarly for cryptos, when crypto was rising, traders like many like me just profited. But cryptos when was downwards, even now people profit. But the untrained ones who just jump after listening anyone do not succeed. They eventually turn out to be failures. To be successful, you have to have a sound technical analysis, and that is best taken if you find a good course, and better if you find a good mentor. So point is, you have a good sound knowledge, you have a mentor, means a person who is able to guide you live, can walk through you different stages of your development. Obviously this is a market in which any amount of profitability, any percent of profitability can be achieved. No, anyone jumps seeing YouTube, seeing some sessions, seeing something like this, and jumps in a illusion that if he is earning, why can't I earn? That's a pure illusion, and that results in a very bad failure. And I would say with no exception actually, the people who jump straight away actually end up failing, and there is no exception to that. The people who profit over here, make a living out of here, or make a wealth or fortune out of here, are the people who do it in a way that it should be done, in a manner, in that manner. So the technical analysis, charting, is a detailed subject. As I told you, if I talk about candlesticks, there are hundreds of candlestick patterns, but we don't need to know every one of that. So we discussed a few to have a pattern. These are all research based, and the research is at least based over 10 decades, that is a century at least. And it has indicators, hundreds of indicators. We have hundreds of, not hundreds, many chart patterns and numerous candlesticks. But what we do is you strategize, your mentor help you to strategize that, you go through the experience, and then you get yourself trained to earn lifelong. The best thing I like about these financial markets is, the best thing, that the location doesn't matter. I trade in my home, which is in Lahore. I have to visit out of country from time to time, rarely these days after COVID, but before I used to travel frequently. So if I am in Dubai, for example, no problem. I just open my laptop and I just start my trading over there. I have students in Canada, Australia, Saudi Arabia. My actually financial market students, they, no matter in which location you are, the market is available to everyone. The important thing is that you are well informed, educated, trained, you have the skill. So you are not location bound, you have a financial freedom, you have an opportunity, and opportunity which you can avail any place in the world. You do not need to have an employer, you do not have to have very good big investment as well, because in today's world even big profits can be made with small investments. So due to limitation of the session, only a brief patterns and indicators were discussed, and the objective was to give you a brief flavor of all. Hopefully this was a very you liked the presentation, you got a good essence of how the financial markets trading analysis works in it. But the disclaimer I would like to give before coming to your questions: this session has provided information. It is definitely useful information, but for education purpose only. It is not at all sufficient for trading purpose. It's a clear disclaimer. Do not assume that without proper course or mentoring you should jump in. No one should jump in without a proper course and mentor or mentor. If you don't find a mentor, that's okay. You can at least go for a course, formal course. And if you are able to find a mentor as well, then nothing like that. So this is for education purpose only. Don't assume that in this 1.5 hour you have learned a lot that can take you straight away to trading purpose. Obviously that's a skill which cannot be mastered in 1.5 hour. Obviously not. Anyone who wishes to trade in financial markets must undertake proper education and training before considering any investment. Uh, Anyways, because the subject is this, I would definitely like to inform that once a year or maximum twice a year, I also do offer a formal course. That is, it is online, live, interactive, and I do provide mentoring. Mentoring means that after the course, I take make a walkthrough of my participants until they are well trained in a few matter of days, weeks, until they are trained. But because of my limitation, I just offer once or maximum twice in a year. Most of the years I just offer once. There was an year in 2020 when the COVID just appeared, I also offered twice a year. So if you consider my course or my mentoring, in case you want to consider that, stay tuned, and you can ask my contact from this. I would request ACCA to circulate, if they wish to circulate among you in a month or so, not immediately. I do plan to go for my next course mentoring session, but it will be next month or maybe a little later. But because it's only once a year, so it's not an opportunity to be missed for anyone who want to take it, because the next opportunity will be something like after 1 year, and I obviously do not afford a lot of time to keep these courses, offer these courses. So thank you very much for this attending, and now I would like to take your questions. I'm not sure that the moderator, Mr. Feroz, is actually available with us, because I
No, I'm
can see
available.
you are available. I can see a note
Yeah.
that you're coming back in 7 minutes. So okay.
No,
So
I'm back.
thank you, Mr. Feroz. So would you like? So I would request you to moderate for the question answer session so that I can go
Sure.
ahead.
Sure. You guys have any questions? Please type in. Or if you have any feedback for right sub, do share your feedback as well. I haven't seen any question rather than facing trouble connecting. But if you guys have any question, please type in. Okay, we have started to receive some feedback. Aslam Sadiq is saying, nice session. Muhammad Amir Riaz is saying, excellent session, learned a lot.
Thank you very much for the positive feedbacks. I really appreciate your uh, obviously it's your appreciation, it means a lot. And thank you for attending, everyone. You all are great people, so it was very nice giving you the presentation. So any questions you would like to ask me regarding this technical or financial markets, please do feel free.
People have started to share some feedback as well, but not any question till now.
Okay.
Do you guys have any question? Okay, we have started to receive questions. Raisab Ahmed Rame is asking, would you recommend any books for further reading?
Uh, if you ask my personal advice, this is purely my personal, being an experienced trader myself. I, instead of recommending any books, because there are so many books that it is even difficult to manage them or sequence them. Just write forex or stock market or technical analysis or anything. Just Google it, you will find hundreds and hundreds of them. You just write the same in the YouTube, you will find a hell of videos, people making videos all the time, round the clock. But being experienced, I can just give you one simple tip: none of these work. These are simply theoretical part. If anyone really wants to be an investor or trader, then he must go for a formal mentored course. That's always a better choice. It will be quick, effective, and efficient. But yes, if for a theoretical knowledge, if you want to look at the chart patterns, you are fascinated by the candles, you want to just, you feel like you don't want to invest, but you just want to have the knowledge, then any all the videos on the YouTube and all the books are all good and all quite similar. The content is not much different in all these, so not a particular book or something to be recommended, but you can go for any one which you like, and all are useful. It's not that any book you read will have less information. Every information is good information, but in practical that won't help. That is the truth I would like to share with you.
Thank you, Raisab. Uh, we have a question from Muhammad Ijaz. He wants to seek some clarity on how does selling takes place before buying by an individual investor, or it is suitable for a broker only.
It's a I told you that selling beforehand, before buying, is a normal transaction, not in the financial markets but in the real world as well. As I gave you an example of a shopkeeper, I'm not sure that my sound was clear at that moment or not, but it's a normal transaction. Just remember that sale can happen before buying. It is very normal in the world we live today, very normal. For example, uh, let me give you an example. I just go to a tailor, for example, and just want to have my garment stitched in a particular pattern. So I go to him, I select a cloth, but I don't take the cloth with me at home, and neither the tailor has just stitched the cloth with me, but he asked me for the full payment or advance at least. The moment I gave him the money, actually his sales has already been booked. He has already sold, despite the fact he has not even yet cut the fabric, he has not even started to stitch. So his buying pattern will happen later. He has sold me before. Similarly, I go to any grocery shop, any, and I don't find a particular grocery item over there. I give him the money and tell him that please buy that for me. He don't have that in his stocks. So as soon as I gave him the money, his sale actually occurred already, but he hasn't bought it yet. He will buy it later. Same happens with in the financial markets. You can buy an asset, later sell it, or first you sell it, later buy it. Both the transactions, you can profit in both the transactions. And on the point that if you want to see how it works, it is a matter of clicks, because it's all on the internet. You just click the sell button, the asset is sold. You just click the buy button, the asset is bought. So there is nothing for me to display over there. I do have my personal platforms, but obviously for obvious reasons I cannot show you my uh, real investment account in which my investments are displayed, my trades are displayed. That is obviously very personal to anyone in this world, so that is not a possibility. But I think there are a lot of demos and etc available. You just click the buy and sell, it will happen automatically. I just gave you the concept, the logic, that don't get confused. It is always very easy, it is always very possible that you sell first, later buy, or make it the other way around, that is buy first, sell later. Both are okay. So hope you got the answer.
Thank you, Rishabh. Numan is asking which technical analysis method is widely used.
All those I have mentioned are very widely used. I have only mentioned those which are widely used. There are many other which are not widely used but available. So yes, for example, if you want to ask me about RSI is very widely used. Line chart or candlestick patterns is very widely used. Chart patterns, the one I just showed you, all are very widely used, very widely used. So these all are very widely used. These handouts will be available to you, and you can so after the session you can have these handouts for your revision or knowledge as you wish.
Okay, so Adnan Naseem is asking what are the indicators used for short-term trading in the charts like 30 minutes or 1 hour?
Which are the indicators used? Actually all indicators are used for short term as well as a long term. What happens is that you decide on the time frame. For example, I say about RSI, if I want to trade short of I'll be seeing would be, so it will be of 5 minutes. Because of the internet connection I have turned off the webcam. I just saw a displayed message. So I will be using 5 minutes candlesticks if I want to take short-term trades. If I want to take long-term trades, I will be using candlesticks and indicators placed on a time frame of 1 hour or 4 hours or days. So it is about which chart you are using, which time frame chart you are using. So if you want to trade for short period, open short trades, and if you want to open long trades, then you will be seeing the long-term time frame. Indicators and candlesticks remain the same, irrespective of your trading time period intent. Any other questions?
Yes, a very relevant question from Sayyid Abbas. Uh, he has stated most of the techniques in the financial market rely on past data or history. Isn't cryptocurrency in this era making the past trend irrelevant? Is the cryptocurrency going to sustain for the next 10 years?
Crypto, actually its popularity started to happen in the year 2007, roughly speaking 14 to 15 years before. So if you want to trade cryptos for a matter of few minutes or few hours or few days, there is sufficient data available. That is from 2017 till now. you have 14 to 15 hours available, 14 to 15 years of data available, which is not which does not put you into any disadvantage. And the next question which you have asked me is that whether the crypto will exist for the next 10 years. Actually, who knows? When the crypto emerged, no people used to believe it, including me myself, that it can be such a big thing of tomorrow. No one believed it, but it did something so well that each and every, even small child today know the name about Bitcoin and Ethereum. So who knows what tomorrow is going to bring? So I don't think that this question can be answered that it is going to remain for next 10 years or maybe next 100 years. Who knows? So uh, you can ask me about the price level, that where it should be heading towards, that I can give you an answer. But if you ask me that what is the future of South Asia after 3 years, so I don't think that I'm in a position to consider that what would be the economic scenarios in the future. So remember, there is a difference between forecasting and predicting. What I displayed you in previous and today's session is about forecasting. It is not about predicting. There is a difference between the two. Prediction is something that comes out of no analysis. Forecasting is that you analyze the past and accordingly extrapolate to the future with assumptions that if these conditions hold true, the next point would be, the next outcome would be this one. Okay, so hope I could answer your question, whatever your intent was.
Thank you. Last question. Sometimes results don't go as planned using the technical analysis. How would you know that you interpreted wrong or the market is being manipulated?
uh, yes, that is a very, very intellect and very practical question, I would say. uh, for each pattern which I have discussed, I discussed the validation points, that how to enter the market at what point and similar things. But actually, every indicator also has its invalidation points as well. That if the conditions change, meanwhile, your visual should help you to uh, realize that the pattern has changed. The pattern, for example, if I can explain you, the symmetrical triangle has broken, but the broken symmetrical triangle can change into a foul break as well. So you must be able to identify the difference between a break and a foul break. That is a pattern validation and a pattern invalidation. At which point it will be invalidated, that is the part of technical analysis as well. So any trader who's informed, who's knowledgeful, very well knows that when it is an invalidation, when a trade has reversed, and accordingly he can change a loss-making trade into profit as well. For example, if the prices are going above, I just put a buy position, but suddenly the market conditions changed, or for example, a new news broke up and the prices just turned against me, and it finally proved to be the bullish market finally turned into a bearish market. Okay, the previous trade must have given me some sort of loss, so-called losses, but as soon as I understood the pattern, I just reversed my trade. So the next trade should be my profit, which should compensate the previous losses as well, and taking me to the net profit ultimately. So uh, it is all about the strategy development, it's about money management, it's about risk management, it's about return management. It has a lot of things. And for example, to explain the point, my course tends to be of 4 weeks, just to give you an idea, and after that it continues for a minimum of 2 weeks of mentoring as well. And then anyone is in a position to depend on these trading to earn a living or to earn a fortune or earn a capital, whatever is the objective. So it's all about, as an ACC community, yes, you all are privileged that you have already have an information knowledge about managerial finance, that is financial management, sorry, and management accountancy. You have studied a lot, maximax, maximin, minimax rules, decision making rules, decision trees rules, and etc. 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 You have a lot of knowledge. The only thing is that you are not, many of you, not all, many of you might not be mentored by an individual to put that already known knowledge into practical perspective. That is how, if any one of you are interested and you find a mentor or a real reasonable course, can fruit can take advantage of this market for yourself. Obviously that is a personal choice to do this business or not. So hopefully I could give a detailed answer as well for this question. You got your answer.
Thank you, Rachab. Thank you so much for giving us such a detailed answer and for all the knowledge that you have shared today with us. Uh, the next session would be on Wednesday. It will be based on the fundamental analysis. And anything else that you want to add, Rachab?
No, thank you. That would be all for today. And thank you very much to all of the attendants for taking out time and attending this session. I sincerely believe that this session should have brought you some useful information. So see you day
Thank you
after
so much.
tomorrow. Have a, have a very good day and week ahead. So meet you day after tomorrow, inshallah. Bye
Thank you,
bye.
Rachab, so much. Have a good week ahead, everyone. See you guys on Wednesday. Bye bye.